Okay, let's dive into this. Welcome back to The Explainer, everybody. Today, we're tackling something absolutely crucial for your crypto toolkit. We are officially on day 8 of our trading curriculum, and we're talking about volume analysis. Look, if you've been staring at price charts, watching those lines bounce up and down, and you constantly feel like the market is playing tricks on you, well, you're definitely not alone. That's exactly what happens when you only look at the price. But today we're learning about the market's ultimate lie detector, trading volume. By the time we wrap up this explainer, you're going to look at your charts in a completely different way.
So here is our agenda for today. 1. Understanding trading volume. 2. Volume versus price. 3. Spikes, breakouts, and confirmation. And 4. A practical historical trade analysis.
Let's jump right into Section 1, Understanding Trading Volume, the foundation.
At its core, trading volume is literally the heartbeat of the market. It just represents the total amount of a cryptocurrency that's been traded over a specific window of time. But I want you to think about it a little differently. If the price of an asset is a car cruising down the highway, trading volume is the engine powering that car, right? Without the engine running, sure, a car might coast forward for a bit just on sheer momentum, but it's not going to sustain a long trip. The crypto market works exactly the same way. You absolutely need that engine revving to sustain any real structural price movement over time.
Now, when you pull up a chart, volume is almost always shown as a series of vertical bars right down at the very bottom of your screen. It's pretty straightforward. A short bar means low volume, a medium bar is just your average interest, and a towering high bar means there is massive activity, and more importantly, conviction behind that trading period. Every single one of those bars is a visual representation of exactly how hard that market engine is working at that exact moment.
Moving right along to Section 2, Volume versus Price. The lie detector test.
Let's put two incredibly common scenarios side by side. In the first one, the price moves up and it's accompanied by high volume. This right here, this is the truth. That high volume confirms real buyers are stepping up, they're putting their capital on the line, and they're driving the price higher with genuine conviction. But check out the second scenario. The price moves up, but the volume is just incredibly low. Guys, this is a classic fake out. The price is climbing, but hardly anyone is actually participating in the move. It takes very little money to push the price up in a low-volume environment. What that means is, as soon as the real market wakes up, that little price bump is highly likely to completely collapse.
So the absolutely crucial point I want you to take away is this. Price action alone is totally misleading. You really can't trust a price chart if it doesn't have volume data right there with it. Volume is the ultimate validator. If the price makes some dramatic swing, but the volume doesn't back it up, guess what? The volume is right and the price is lying. It really is that simple. Grasping this one core concept is going to save you from buying into so many false rallies.
All right, Section 3, Spikes, Breakouts, and Confirmation.
I want to pause here for a second and ask you to really think about this. Imagine you open your portfolio app and a coin you're holding has suddenly jumped 10% in the last hour. How do you know that move is actually real? How do you know it's a structural shift in the market and not just some temporary blip that's going to fade by tomorrow morning? Well, the answer is in the evidence left behind on the chart.
And the main piece of evidence you are hunting for is called volume confirmation. Volume confirmation happens when the trading volume strictly supports and backs up the story the price is telling. If the price is finally breaking out of a long, painful downtrend and starting to climb, you absolutely must see the volume expanding to confirm it. That volume is what tells you the rest of the market participants actually agree with this new direction.
One of the most obvious forms of this confirmation is a volume spike. You want to watch closely for these. A volume spike is a massive, sudden clue. It's that bar at the bottom of your screen that completely dwarfs the recent average, pointing to a sudden, explosive surge in interest. And listen, this isn't just everyday retail traders tossing in a few bucks. A massive volume spike usually means whale money or institutional capital is stepping into the arena, signaling a very real, very powerful shift in the trend.
Now, these spikes also interact with critical price levels to create what we call breakout volume. When a crypto has been stuck under a certain price ceiling, which we call resistance, it takes a massive surge of buying power to finally shatter it. Breakout volume is exactly that surge. If the price breaks a resistance level but the volume is super low, honestly, you ignore it. But if it breaks that ceiling and it's accompanied by a massive volume spike, that's breakout volume. And for a trader, that is an absolute green light.
Let's wrap things up with Section 4, Practical Historical Trade Analysis.
Okay, let's talk about how to build this into an actionable daily routine. If you want to really master this, here is exactly what you need to do the second this explainer ends. Step 1. Open a chart and pick a major historical price swing, like a huge crash or a massive rally. Step 2, overlay the volume indicator at the bottom of that chart. Step 3, put on your detective hat and look for the confirmation. Did the volume spike right as the breakout happened? Was there a glaring lack of volume right before a major crash? By practicing this on past data, you're literally training your eyes to instantly spot the truth when it happens live.
And that brings us to the core mindset shift for today's lesson. We've established that the market is always trying to trick you, and we've just handed you the ultimate lie detector to fight back. So I'm gonna leave you with this final thought. The next time you see a sudden, exciting price jump on your screen, are you gonna blindly trust the move and rush in? Or will you stop, check the volume first, and wait for the market to actually prove it's telling the truth? Mastering that one single habit will completely change the way you trade. Thanks so much for joining me for this Day 8 Explainer.